Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at the psychology of trading, because this is a topic that not many gurus or software vendors talk about, and it shows you how hard trading can actually be. And I think it's important to understand that trading is not as easy as most gurus and software vendors would lead you to believe. So I just want to go through an example from last Friday on the YM, a short-term day trade, which was Friday the 19th, just to show you what the mind games that the market can play on the trader as you progress through a trade. But first, let's start with our risk disclaimer. Remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at some losing trades in this video as well. Right, let's get on to the video. So the day I want to look at is this day here, which is a short-term 3-minute chart on the YM for Friday, July the 19th. Right, for you guys who have been following MTPredictor for a while will know that we don't just blindly follow MTPredictor as like a black box system, and this is what we'll show here, because the markets are basically random half the time, and half the time they are a little bit clearer, so we only trade when the pattern's clear. So let's start off by deciding what the pattern would have been, or the large view trend would have been going into that Friday. For this we go to the higher time frame chart. For this we look for a time frame between 3 and 5 time frames higher. So if you're on a 3-minute chart, it would be the 15-minute chart. If you're daily, it would be the weekly chart. If you say a 4-hourly 4x, it would be the daily chart. So I just want to use training mode in our MTPredictor version 8, and I want to go back to before Friday even opened. So this is doing the latter parts of Thursday the 18th, and you can see here we had the last swing into the low. So this is the low here. This is the last swing into the low. So we go back to this last pivot, we right mouse click, we do decision point. This gives us an area of potential resistance. But can you see how it was on the chart before Friday even opened, before the day even started? So let's see what happened on this 15-minute chart. If I scroll forward, the market came up as the market opened on Friday. This is Friday the 19th, and came right into that resistance. And if I actually turn trading mode off, you can see that actually nailed the high of the day. But the important point is that was on the chart ready in advance. So how do we use this when we're actually on the time frame we're trading? Well, for you guys who've been following us for a while will know we then look to see whether the market makes a meaningful reversal at that level, which, as you can see here, here's our 15-minute resistance. You can see it there. The market did. It made a meaningful reversal off that resistance. Our MTP trend went grey to show you in the process of making a reversal, and the market started to come down. So at that point we can then deem that the market trend is down. So let's go through using our training mode. I want to jump back to here and just see what would have been happening on the sort of psychological side. So we defined that the large view trend is down because there's your resistance. You can see it caught the high nicely. So as we scroll forward, our MTP trend is black. There was a potential buy setup. Now this is where people who don't follow our training videos will get confused, because if you just buy the software and you look at this and you think, oh, it's a black MTP trend, you can take both signals, and therefore you could take this as a buy setup, wouldn't understand how we've actually used the higher time frame to define the large view trend as down. So in this case we'd actually be avoiding this, because we know our grey MTP trend means that the trend is reversing from up previously to down now off this resistance level. So therefore we'd have the confidence to know that actually the market is more than likely to carry on going down there if we'd avoid this buy setup, even though it looked like it was starting to go with us. It looked like it was quite good there, didn't it? So here you'd be sort of kicking yourself and saying, well, actually psychologically, why didn't I take that? It looks like, whoops, it looks like we're sitting on, oops, sorry, I'll just clear that. I've placed this analysis on. It looks like you're sitting on about almost 2R. That looked like it could be a good trade, so you'd probably be kicking yourself. So psychologically you'll be not quite sure about that. Doubts will be coming into your mind. Let's move forward. But sure enough, the market then starts to go down, and you would have actually been stopped out. So of course it would have been the right decision, because you had the confidence you were coming off this higher time frame resistance. We now move forward. The market has gone down. Our MTP trend is still grey. We now have the confidence that because this is the resistance, we are now looking for short trades because the large degree trend is down. That's the important thing. We'll be looking for short trades. So if you had your scanner running, you'd then be looking for short trades rather than this buy setup. Should we go forward? We're still waiting. We're anticipating short trades. Suddenly you get a TS3, W3 or Wave 3 trade setup. If you right mouse click over the red cell bar, this looks to be a very good trade setup. Remember, we use position sizing to keep your initial risks small and under control. So if you're using 2% of a $20,000 account, it would mean 8 contracts. If you're using a slightly smaller account, obviously that's adjusted accordingly within the software. But that looks like to be a good trade setup. So you place your orders and you then move forward a bar, and you can see here you may well have been stopped out. I don't quite know what happened in this. It might have gone up and then gone to the stop trigger first before going to the entry trigger, which means it would have been invalidated and it wouldn't have been a tradable setup, so there would have been no setup there. But let's take a worst case scenario. I think there's far too software vendors who look at the worst case scenario. So let's take a worst case scenario and assume you were in this trade and assume that you were stopped out. So here you'd have had a losing trade. Position size, it keeps that loss small at -1R. You'd have been one risk unit down. You clear everything off, you suddenly have another trade set up. So you've just been stopped out, but then you have another trade set up. So right, okay, I want to go back into this one again because I have confidence the large trend is still down. You then move forward, exactly the same happens. Again, let's take a worst case scenario. You're stopped out again for -1R. So here you are, within a couple of bars, you've suddenly made 2 losing trades. Well, that isn't very good, is it? So now you start to have doubts in your mind and think, well, this is not a good day at all here because you've had 2 losing trades. And this is the problem with the market. Doubts start to come in. So here you have a third attempt. Now, some of you might think, well, actually, now I've had 2 losing trades. I don't want to take this. But let's say you have the confidence to say, right, I'm now going to take this. I'm 2R down so far. I want to get back at the market because I want to make sure that I'll end up, positive for the day. So now you go in again. This looks like another good trade as well, potentially. This time 5 contracts for the same 1R risk. This time the market starts to go with you quite nicely. You get taken in, it starts to drop. Starts to drop slowly. There we go, starts to drop. Suddenly you have a TS3 buy setup come in. Here the MTP trend has gone blue, so you might suddenly start to doubt yourself again. You might just like to doubt your higher time frame resistance and say, well, actually, I'm not quite sure what's going on. If you look at what the potential profit was at this time, it's about 2R. So here you were in this position here, where you'd have just made 2R loss. You're sitting on a 2R loss so far, and the market has suddenly given you 2R back. Some people might actually say, right, okay, I'll take that, and end up break even for the day. Other people might think, well, actually now I don't want to lose this. And this is the main thing that I wanted to look at today, is the psychological games, that if you are now down on a couple of losing trades, which you always will be whenever you're trading, there always will be losing trades, you then see this, you see you've got a small profit, and you say, I want to protect this at all costs. So you now bring your stop to break even. Let's see what happens. The market then starts to go up, you think, phew, suddenly then stops you out for break even. So here's the situation now. You've now come out on this trade, break even. You had 2 losing trades before, so -2R, and you are sitting still -2R for the day. But can you see how the market basically played with you and said, right, you had 2R profit. Psychologically in your mind, fear came in, and you said, right, I want to protect now this last one. I don't want to lose again. And you then get stopped out. Let's see what the market now does. Reverses straight back down again, and then actually drops really quickly, drops like this, straight into this DP target, where there would have been a potential 5R profit. So here you'd be kicking yourself. You'd be kicking yourself because you stopped out just on fear, because you were a couple of R down earlier on. Maybe you might not have brought your stop to break even. Maybe now you might say, well, phew, I'm now 5R up. That's better than getting stopped out. I'll now take that profit and come out with, say, a small 3R profit for the day, which isn't too bad. But let's see what the market then did. remember that you had the confidence at the start of the day that this was the higher time frame resistance. The large trend was down. So let's keep on going forward and let's see what the market did. Started to go down, carried on going down, was going sideways, was playing around. You know, there always will be moves against you as a trend establishes. And then suddenly, just towards before the end of the day, look what happened. The market came down to your original target where a potential 10R profit was available. So if you had made minus one, a 2R loss earlier, again that's a worst case scenario. I don't believe they would have been actually losing trades there by the way the market unfolded in real time. If they had been a worst case scenario of minus 2R, you suddenly have 10R profit and you come out at the end of the day with plus 8R as a very, very good trading day. But can you see how in the process of that the market would have played some really nasty psychological games on you, and it would be oh so easy to then get stopped out for break even here and miss out on that 10R profit. And that's why I wanted to do this video today, is that no matter how easy trading seems and how easy software gurus and software vendors will tell you, because in hindsight you can look at this and say, oh, isn't that easy, there's your 10R profit. But actually at the time the market can give you some really hard psychological games it plays with you. So that's why I wanted to do today's video, in that when you do your analysis and you have confidence in your higher time frame trend direction, then you need to stick with it. And just want to let you be aware of the psychological games that the market can play as it starts to go with you. And this is one of the hardest things in trading. The first thing is to actually stop losing, is actually keep the losses out of your trading account, and by keeping the losses small at minus 1R. The next bit is to make the big profits, and the way you have to do that is you have to let trades run. And to do that you have to have time for them to unfold like this. I mean, this took quite a few hours to unfold, and you have to go with psychological real hard times as the market almost retraces back, almost wipes out all your profit before it then starts to go back with you. Because if you now, I'll just turn training mode off here, because if you now go back to the 15-minute chart, just see what a lovely pattern this actually unfolded at the time. Here it was, the market went up straight to your resistance, it came down with an initial move, it went up for a wave 2, it then retraced down in a wave 3, there it is, a perfect 1, 2, 3, and that is the move you're looking to trade with a wave 3 trade setup. So on the higher time frame chart, really nice, clear and clean, exactly what we're looking to do. Come in here at the wave 2, looking to trade the wave 3, which is the strongest and longest wave, into the typical wave 3. So on the 15-minute chart, really nice, clear and clean. But on the time frame that you're actually trading, there are wiggles along the way, and they're the hard times when the market is wiggling against you. So this is the video I wanted to do today, just to show you that when you're actually trading, the market can play psychological games on you, and this is sometimes the I think is the hardest part of trading sometimes, is not just understanding the technical side of trading. That is relatively simple, understanding what to do on the technical side, but sometimes making the most of it and actually dealing with the mind games that the market will play with you as you're a trader and as the market's unfolding is sometimes the hardest thing to do. So I just wanted to do that video today just to make you aware of the games that the market can play, so you're able to counter that and move forward, and not only keep your losses small as we did here, which is the first part of the equation, but also have the confidence when the picture's clear. Obviously if there are other reasons to bring your stop to break even, or to come out a bit earlier, then obviously you do that. But if there are no other reasons and the original largely trend looks to still be intact and looks to still be a nice, clear and good picture, to then have the confidence to let your trades run. And if you do, just use training mode again, then you have the possibility to be able to uncover some great trade setups like this. As you can see here, a potential 10R profit, or a profit that was 10 times the initial risk that unfolded last Friday on the 3-minute YM.